Hey everyone, welcome to another edition of the Smart Investing Weekly Stock Analysis. A lot of talk about, dividend investing and also the Fed stress test, which is going to have a big impact on the banks. And in particular, we really think it's going to have a big impact on their dividends. Brent, what are your thoughts on this?
Well, my thoughts are I agree with you because this is a huge thing, Chase. I mean, these banks are sitting on trillions of dollars that they can't pay out. And with the stress test, when it came out, they virtually said, hey, you guys are back to normal. All that cash accumulated now can be paid out in the form of dividends or stock buybacks, which could be huge as well. Because I'm very curious how much they're going to be buying back because they got billions to buy back with.
I mean, it's just crazy when you actually look at this. I mean, the stress test, obviously, you kind of went through a mini stress test last year with COVID because it tests like these severe perimeters. I mean, it wants to look at saying if unemployment peaks at 10.8%, if there's a 55% drop in the stock market, how are banks going to respond to this? And we know the banks were actually very strong throughout the pandemic last year, and they can continue to kind of weather these downturns, which is a very important thing. And I actually pulled a quote here from, gosh, I always butcher his name, but Brian Moynihan, the CEO of Bank of America, because he's talking about, well, we're confident we're going to pass the stress test. They did. He said we expect to increase our dividend and increase our share buybacks because, frankly, it's simple. We're making good money, doing a great job for our customers, and it's a great job for society. And therefore, our shareholders ought to benefit too. So that's what we'll do. And again, that's what's going to be occurring is we're going to see these banks, I think, really issue out nice dividends for their investors, which I think is a good place for investors to be looking at this time.
And I do want to point out to investors that, I mean, banks have come up an awful lot over the past year or so, but I think there's still more room to run. I think it is worth investing in the right banks because they do have, again, a lot of positives going forward. I don't want people to forget. I mean, we do believe interest rates will be rising more. I know they went up to 1.7 on the 10-year treasury, back down about 1.5. But I think you look down the road 6, 12 months, I think you'll see rates higher than they are now. And that's a positive, another positive for banks as well. So I think the banks have a good run going forward here.
Yeah, I mean, absolutely. And the thing that you got to watch out for is the stress test. The results came out yesterday, and I guess now on Monday is when we'll actually start hearing capital plans from banks. So this is when we could actually see some numbers in terms of buybacks and dividend increases. So keep an eye out for that.
And Chase, I thought that they could do that after the 30th. Is that the date, or is it going to be after Monday? Do you know the exact date it was going to happen?
So they'll start to come out with plans on Monday, and the cap that was implemented on buybacks and dividends last year will end on June 30th. So 2 days to kind of be aware of there.
Yeah. So if people are going to invest in the banks, they may want to look at what's happening on Monday morning because that could be some good buys left, but maybe after 3, 4 days. Although we do have the holiday coming up a week from now, July 4th. But I wouldn't want to miss this because I think it's going to be good time and some nice yields I think they could see on the bank's dividends.
I know dividend investors, I think a lot of times forget to think about the banks, but they're really a sound investment strategy when it comes to looking at dividends because they traditionally increase them. So good place to look. But as always, we do want to break down the fundamentals for our companies. It's not just about the hype in the stocks and what's going on in the news. Very important for us when we invest, we're looking at the fundamentals. We want to know what's going on with the numbers behind the businesses. So with that, we'll pull up the fundamentals we're going to take a particular look here at Bank of America. I think this is an interesting one for investors to consider.
Yeah, I'm kind of surprised when I looked at the P ratio. And again, we compare all the numbers of the company to the industry average because a number means nothing at all unless you have something to compare it to. We do compare the industry average, which that company competes in. Looking at Bank of America, we do see that the P ratio, I'm kind of surprised, are a little bit higher than I thought. It's 17.47. That is above the industry at 11. I do see price to sales also expensive. That's 4.1 versus 2.9. And then looking at price to book value, very important on banks. Here again, also expensive, 1.7 versus 5.6. So I'm kind of disappointed to see these numbers. I do see price to cash flow is at 15.65 compared to not material for the industry. We talked about the dividends. Currently, the dividend yield for Bank of America is 1.76. Very important for investors. How much of their earnings they use to pay it out? Well, their earnings with a dividend payout ratio is 30.6%. So a lot of room there to grow that dividend we've talked about. Looking at the sales growth, again, remember, this goes back a year. during a very difficult time. Year over year, the sales are actually down 32.2%. Industry was actually up 0.05. We do see that the earnings per share for Bank of America were down 4.7 versus the industry up 14.7. So Chase, I'm getting a little bit worried. Look at these numbers. It's not as good as I thought it was going to be on B of A. So I want people to be cautious here. Look at the balance sheet for Bank of America. It's financial accounting. It's a little bit differently. They have no current ratio. Debt to equity 172. That's very good because the industry does check in at 313. We also do see what type of return on equity is a company going to get, in this case, Bank of America. We see return on equity is 8.3. That is below the industry average at 10.7. You do want that higher than the industry. Also very important, how much does your company or your bank make after they pay all their bills? Called the net profit margin. That's a 25.6. That's slightly above the industry at 24.7. So I got to be honest here, Chase. I'm not quite as excited about Bank of America as I thought I was going to be when I saw these numbers.
Yeah, I was a little surprised by that too. And I mean, I thought that they might have a little bit more potential there. Do know that I think that there'll be a lot more loan losses coming off the balance sheet. So I think that'll help improve the margin for the company going forward. So it's something to consider. But yeah, a little bit disappointed. I think B of A may not be the best in the industry, so to speak. I think there might be some other options, but before we kind of make that determination, I guess let's look at the current price and what we're looking at going forward. And what we're looking at here is we see a current price for B of A of $40.83. It is near its 52-week high of $43.49. So again, it's done very well because you look at the 52-week low of $22.39. I mean, that would have been a phenomenal time to be buying, but I can't go back in the past. Can only look at what's due now. Now I look out to December 2022. I see estimated earnings per share for B of A of $3.11. You can see that down here. That would give us a target sell price in this case of $51.63. So that's a positive, but unfortunately it's just 26.4% away from its current price. We like a 30% margin of safety, so this would actually be in our hold category. And one thing I will point out is these share buybacks. I am curious if they come out with a plan that just blows away analysts. You could see that earnings per share increase because as that company buys more shares back, well, now the share count outstanding gets reduced, which could increase the earnings per share. So that's something to consider, as well as potentially a higher yield. So I think Monday is going to be a big day, and it could maybe come out throughout the week. They might not come out on Monday. That's just when the Fed said they can start releasing their plans.
And Chase, I'm glad you brought up about the buying back the stock, how that can actually increase the earnings because of less shares outstanding. There's less people with their hands in the pie, so to speak. Do you have the number for analysts that are following Bank of America and the range of those earnings estimates? There we go. What do we got here? 25 analysts for December 2022. The range, we always look at the range to make sure it's pretty close on those 25 analysts. It's not too bad. I see a high of 345, a low of 256. But again, we'll see if they buy back stocks or even they announce the buyback. We could perhaps see that 311 rise. So keep your eyes close on that. But you want to mention there's other banks out there that you want to look at to kind of do the comparison. The big money center banks have to be comparing to.
Yeah, and I do think it is an interesting industry to be looking at. I just don't know if BFA is the right one. I want to look at maybe a Wells Fargo, maybe a Citigroup, JP Morgan, of course. I think they're quite big out there as well. So consider the other ones. I think financials are a good spot. Maybe BFA is not the best in class, but I think financials are a good spot to consider.
You know, Chase, maybe in the future we can kind of tease a little bit too, because one thing we've not looked at is regional banks. They could be doing well also. So maybe we should make a point to maybe in the future look at some regional banks that are the bigger ones and see how they're doing as well.
Yeah, of course. I think that's a great idea. But do want to thank our listeners for our viewers in this case for actually watching this week's edition of the Smart Investing Weekly Stock Analysis. You know, if you really like what you heard today, be sure to hit that button below and subscribe to future videos. Subscribe to our YouTube channel. Also, we do have podcasts available on our website, smartinvesting2000.com. We are a registered investment advisory firm that actually gives investment advice to clients and also do have financial planning services available. So interested in anything that we can do to help on your financial needs, go to our website again, smartinvesting2000.com. And thanks for watching and stay tuned for upcoming videos.